Buongiorno tutti! Hello everybody, welcome to your Power Trading Radio Show for Thursday. Yeah, I don't know what's going on with the color here. Yesterday I looked okay, day before was pink, now I look just completely hot and blown out. Gotta love auto settings. Anyway, I hope you all had a great trading session out there. Some very big moves happening with some of the SPACs, which is why I wanted to talk about that as this show kind of overall topic. Of course, as you know, I will go into pretty much any listener question that I can tackle here. If I can't get to it on today's show, well, you can always email me or let me know, and I will try to get to those questions further down the road. Anyway, big shout out to all of you. We got Les from Cape Canaveral. Hello, ML in Irvine, California. You're local here? You got an Irvine, California guy with this wonderfully horrible weather today. Mr. Barr, good to see. And you can't psychoanalyze me on this picture. I mean, come on. What are you going to try to figure out there? That I'm screaming in agony? No, you guys, we'll talk about VIH today. As you guys know, I do own VIH. I still am in it. And I will say that my opinion has changed dramatically of VIH after having played with their app and looking at their business operations for the past 48 hours. Certainly, I guess I was wide-eyed and optimistic for them, and now I'm looking at them going, you guys did a bait and switch on me, and I'm kind of pissed off about it. But whatever, we'll analyze that one today as a part of the SPAC landscape. But finishing out my shout-outs to Alan and Batista, Jerry, Richard, Terry, good to have you guys with us. Bobby Phillip, have I seen you on here before? We got a new guy? If you're new, hit that subscribe button. Welcome to the fray. Hopefully it doesn't hurt too much the first time. All right, as you guys saw, topic du jour is the SPAC Exodus. Now, I always like to have a little bit fun graphics here, and this one I thought was kind of cool because it looks like the guy's just freaking out. I had a couple to choose from, but I like this one because there has been a pattern that forms with these SPACs repeatedly over and over and over again. And I thought, you know what? If you find a pattern in the marketplace that tends to repeat, it's an opportunity to exploit something. So we'll look at that as we progress through today. Of course, if you guys have any questions, send them on in the chat. If I don't get to them, it's probably because I didn't see the question mark. So if you have a question in the YouTube chat, start off with some question marks so I can scroll through easily and find any that I may have missed, because for those that know me, I tend to get rambling sometimes. All right, let's kick things off with this SPAC discussion over here, and I want to look at a table of a few different ones. These are the biggest by market capitalization that are in the process of acquiring somebody. Now, that's important to understand because there are a lot of SPACs out there right now that haven't found anybody to acquire yet, right? So, for example, the Pershing Square Tontine Holdings SPAC is one of the largest out there. It's huge, $4.9 billion market cap. But they're not acquiring anybody, so I'm not interested in them yet. Of course, they'll probably acquire somebody, and maybe the same pattern that we're going to look at here forms. So all the ones I'm going to show you now are in the process of or have just completed the acquisition process. For those who don't know what a SPAC is, I will do the very high-level Cliff Note version right now. A SPAC is simply a company that goes public with the sole intention of bringing somebody to market, of buying a privately held company and bringing them public. So it's basically a blank check company. It's got just a bunch of money. In this case with Pershing Square, as I use, this ticker symbol is PSTH. They got about $4.9 billion to buy whatever they want. But in this prospectus really for the company, they have to dictate what kind of sector it's going to be in, and they have 2 years to make that acquisition. That said, let's take a look at some of the most important or largest ones out there. So one of the biggest ones here is this IPOE. Now, IPOE is going out and buying, it's almost done with the merger of SoFi. Now, SoFi is one of the major financial firms out there, or it's a large, I don't say major, it's a large financial firm. So now you're getting IPOE, which actually has multiple ticker symbols. So there are several different SPACs under this IPO company. It's like IPOE, IPOF, and a few others. So what they're doing is they're bringing them public. Now, what I've done on that table is I'm going to show you the ticker symbol currently, the name of the company being acquired, and the industry that it's in. So for IPOE, again, SoFi, and then that area is going to be financial. And here's the chart of IPOE, which they have not solidified the deal yet. It's still in process, but you'll notice that there seems to be this recurring pattern, which is at the beginning when the company goes public, when the SPAC goes public, things, in this case, actually had a really nice move up, but for the most part, they tend to go sideways. When the deal's announced, there's this huge spike up, and then it just drifts back down. As you notice here in the case of IPOE, it's currently trading at $16.28. It hit a high of roughly $29. So, you're down almost 50% off the high, but that pattern is something that you will see repeat here over and over and over again. So let's go to victim number 2. That is going to be CCIV. Now, they are acquiring a company called Lucid Motors. Of course, everyone's really hot on Lucid Motors, who is the talk of the town. Everyone's really excited because this is a Tesla killer. And good luck calling anything a Tesla killer, but it's another entrant into that electric vehicle space. What does, let me get the symbol up here. What does CCIV look like? Well, you guessed it. It had that slow start. Started off in September of 2020. Really did nothing. You can see on the side here where they did nothing for a period of, 5-6 months. And then they made the acquisition, or told the world that they were going to make an acquisition of Lucid Motors. And it went from about $9, I'll call it $10, all the way up to over 64. And now we are currently trading down about 60% off of that to $20. So you've got the flat, the boom, and then the bust. Now, next victim on this list. Let me get to the chat here just in case I'm missing some conversations. Tom says double down on VIH. No, I'm not going to double down on VIH at this point. I don't double down on investments or trades that are very, very speculative. If it's a gamble trade for me, which is VIH wasn't quite the gamble trade, I'm not going to double down on it. If it was something that was a company I've researched, I really felt strongly about, I've looked at the price charts, and the charts are telling me this thing's in a strong trend, yeah, I might double down on something like that, but not in a speculative SPAC. Remember, SPACs, we don't really know the numbers. We're assuming that the people who started that SPAC or run that SPAC made the right choices or right decisions and paid the right price for this company. That's all something that's way beyond the scope of my financial market knowledge. So let's go to number 3 on this list. Is PSFE, PaySafe. Now, this is a payment company out of the UK, I believe. So PSFE, not as dramatic as all the other ones. There's your chart of it. Not as dramatic as all the other ones. You can see you have that flat action, really was October of last year till December. They made the announcement that they were looking to buy PaySafe, and it spiked up and now shot down. Now, this used to be a ticker symbol. You'll notice on the left-hand side there, it says PSFE. This is a SPAC that is done. When I say done, they've made the merger, they've made the acquisition, and they have switched ticker symbols. If I'm not mistaken, I believe the ticker symbol used to be like BWT. But once the merger is complete, they change the ticker symbol to reflect the company. In this case, it's PaySafe, so the ticker symbol is now PSFE. This SPAC is complete, done, over with. All right. But it's the same similar pattern. Flat, boom, bust. Next. And don't worry, we'll get to VIH here because I got a lot to talk about that one. WPF. All right. This is a similar family to what I think was called BWF or BWF or BWT. WPF is Alight Solutions. This is a cloud computing software company. So they are going out and, again, in their prospectus, they said we are looking to target specific technology firms. Here is the chart of WPF, which is not done. Okay, not done yet. This one is a little bit more dramatic, and what's noteworthy with this one compared to most of the others is how at the beginning it actually sold off. Most of the SPACs stay flat or have a slight rise up, like Pershing Square had actually a pretty big run up, and they didn't even do anything. So you've got this kind of sell-off action, and then all of a sudden, WPF, which was Foley TransMarine acquisition, they made an offer to buy Alight Solutions. That's in process, but it went from $10 up to over 14, and now we're back at $10. So, a 40%, 45% slide in price, and it all begs the question: is this, does this represent buy points for these companies? But wait, there's a couple more. STPK, STEM. All right, this is one that's very interesting. This is an artificial energy storage. I was just reading this in the prospectus. I don't really know what an artificial energy storage is, I'll be honest. To me, artificial storage would be a database of programs and knowledge, but of artificial energy storage, not quite sure what the hell they're doing. But here's the chart of STPK. And again, these are the ones that are largest by market cap. I didn't cherry pick these. I just said which are the biggest ones out there that have made acquisitions. Hello, DJ. Good to have you with us. There you go. So again, flat, boom, and now this is in that weakening cycle. Not as dramatic of a sell-off as the other ones, but still 50% off its high for STPK. Now, on to my dear, darling BAKKT. Now, VIH, before I show you the chart of this one, VIH in 2018 came to market, and in 2019, late 2019 is when I had heard about them, and I looked at their prospectus, not the prospectus, their website. And their website was very clear. We want to be the institutional clearinghouse for cryptocurrencies, and we have the backing of the New York Stock Exchange and ICE. I looked at their board of directors, all their team. It's all ICE and NYSE members. They have people from the regulatory department from these major exchanges on board, and I'm like, well, shit, you've got the key pieces in place. I mean, it's not like Coinbase, who started off with two kids in a basement somewhere. I believe that's actually the story. Two kids in a room in the mom's house. I mean, working on creating some place where they can trade digital assets and going, we'll figure it out as we go along. This is regulatory experts, trading floor experts, exchange experts, all saying, hey, we can do this with digital assets. So if I had to put those two side by side and I say, which one would be bigger, Coinbase or Bakkt? I'd put my money on Bakkt any day because of the experience. Of course, a smart thing that Coinbase has done, as they got bigger, they got seed money, they got investment money, they put the right people in the right places. Now, Coinbase has been around a lot longer than Bakkt. Let's just make that very clear. So I was under the impression that that's where Bakkt or VIH was going, and I was very good about it. So I'm thinking, okay, looks good to me. So when the two IPOs came out, I know that Bakkt is years behind Coinbase, but at a price point of $15 versus, I knew that Coinbase would have a very elevated, lofty IPO price just because of expectations. I decided not to mess with Coinbase, which of course was down today, and decided to go with Bakkt. Now, people are asking, why does the Bakkt chart look like this? And it's not Bakkt yet, it's VIH because it's still in the acquisition process. Here's the chart. You're talking, it's gone from 16 to $12 today. Yeah, nothing like a 25% slide in value in 2 days when you're holding, well, luckily for me, it's only 1,000 shares, plus I have some warrants. So it's not like a massive holding, but it's still, nobody likes to see their position drop 25% in 2 days, and this doesn't look good. Now, you're wondering, well, why is it? Well, it looks to me like part of it is the general pattern that's formed with SPACs, which is flat. You notice here that Bakkt, or VIH, was flat from November to pretty much January. And then all of a sudden they announce they're making the acquisition of Bakkt. It spikes up, huge spike up to about $23, and then has just been drifting down ever since. It did have some nice pops between 15 and 12, and again, we're back down to 12. That said, does this mean that Bakkt or VIH is going to continue its slide to the south side? It appears so. Now, here is where my disdain comes in and my bait and switch attitude. So I have the Bakkt app here, and it actually is a fairly decent app if you look at what it is. It's an app that really basically lets you can buy Bitcoin on it. Ooh, exciting. And you can move around different rewards programs and things like that. But basically what it is, it's just a digital wallet that allows you to interact with retail applications, with credit cards and things like that, and spend your Bitcoin in digital assets. Nowhere in here is it saying anything about being a crypto exchange. Nowhere in here is it saying anything about being a holding company for institutions or looking for institutional transactions. So I feel like VIH has all of a sudden backpedaled and said, hey, look, we're just this cool, fancy, tiny little app that's nice. It's very clean. It's actually a very professional looking app. But I don't know. I feel like I was oversold on the expectation of what this company would be. So, yeah, I'm not pleased with it. In 5-10 years down the road, is this type of app going to be commonplace? Absolutely. And I think that they might be the leader in that area. But I was buying into Bakkt VIH because I wanted the institution side. My feeling was that whoever dominates the institutional side of the cryptocurrency markets, meaning who's handling JP Morgan's accounts for crypto, who's the digital asset manager there, they're going to be the ones that are going to do really well. Coinbase is moving quickly into that space because there's no competition there, and they have the infrastructure to do it. So maybe the barrier to entry was too high for VIH or for Bakkt, and they just said, oh, well, we'll go more of a retail approach. Bottom line is really pissed me off. I feel like that was a total bait and switch there on the Bakkt management. It's still got the ICE, Intercontinental Exchange behind it, still has NYSE behind it, and all the key players in place, but I set on the big institutional side, and that just didn't happen. Is Bakkt app beta the full production, all features? No, I don't believe it is, Tom. I think that this is a quick rollout, quick release. I like it, actually. I mean, it's a nice app. It's actually one of the cleaner interfaces I've seen. Very easy to use, very simple. but it's not what I bought into. I bought into this is a commercial institution back end that's going to be housing Goldman Sachs' portfolio and allowing them to buy $100 billion worth of Bitcoin in a clip. Instead, it's some guy going, hey, you got $1,000 you want to link to your checking account to buy some Bitcoin that you can convert into a Starbucks card? Woohoo! I just don't see that being, a $100 billion valuation company. All right. So this is interesting. For those that might know or want to know more, I had where did it go? Bummer. I had a list of all of the different SPACs out there. It was actually pretty cool. Here it is. I'll bring it up for you guys so you can see it out at home. It's called stockmarketmba.com / list of shell companies.php. I'm not going to torture you with that. I will copy that, I will paste it, and I will throw it into your chat so you guys can check this one out, because I think that for anybody who's interested in SPACs, that might give you some resources to look at, some different company names, etc. And you guys can see I really just sorted them by size, but you can sort them by ticker symbol, etc. And give you some more ideas of what's out there, what's tradable in that marketplace. For me, that pattern, and I went through a lot more, since I cherry picked those earlier and looked for the main names, let me run through real quick and show you what some of the others looked at. We looked at CCIV, Space, right? Space was a SPAC. That one has got a very similar picture, right? Boom, or flat, boom, and then bust. Right now, $23, well off that $60 plus high. You have QS was another big one, right? Same thing, flat, boom, bust. I feel like this is a Superman sound effect or Batman sound effects. Flat, boom, bust. We looked at WPF. What about Ajax? I got Ajax. Well, that one never really even had much of a boom, did it? It just kind of went sideways, a little up, and then a bust. And then last one here is GSAH. And these are all SPACs on that list. GS Acquisitions, again, flat, big boom, and now you're bust down over 60, or down roughly 60% on this one. So the story of the SPACs out there is what I think is an exodus, right? It's that freak out moment where people are going, man, maybe these things aren't that good. And when we did our show back in January of this year, I hope you guys remember that. I said, I think the title was SPACs, Love Them or Hate Them, or Necessary Evil, or something like that. There was a real cautionary overtone there because you just don't know what the SPAC is doing, right? We know that they're trying to buy a specific one like CCIV, trying to buy Lucid Motors. But again, are they paying too much for it? I don't know, because I haven't seen the fundamentals. And ultimately, I think that a lot of these SPACs are probably going to pay a little bit too much. And they don't really care. It's kind of like the Fed. The Fed can screw with the market, and by the time it really backfires and blows up in their face, those people are already retired, if not dead by that time. So, right now with things like GS Acquisitions or VIH, maybe they paid too much for Backed. And if it all goes up and blows up in their face, they don't care because they were all in it way before $10, and they'll lock out a profit anyway. All right. Disgraced former baseball player Alex Rodriguez from my Yankees is investing heavy in SPACs. Oh, yeah. Well, hey, maybe he can juice your SPAC like he juiced himself. I know that guy shouldn't be allowed to have any records in baseball. Just a giant asterisk. Him and Barry Bonds can go stick needles in each other's butts. A bunch of injectors and cheaters. Anyway, what is the old phrase? Something like, if you're not cheating, you're not winning in baseball? No. Okay, I'll get to MJ here in just a second. I want to see if there's any other topic, any questions on this. Brendan, I agree. The place to beat the institutions is with spot crypto. And let me make that, actually, I want to correct that one. My job, and I think all of our jobs, is not to beat the institutions. Don't try to beat them. You're not going to beat the institutions. But do what the institutions are doing and get those types of returns. Great. It's the retail traders that are going to be the ones suffering. I saw a guy who used to listen to the show, but he hates me because I talk about crypto. He blocked me on everything else, but on LinkedIn, we're actually still friends, which is kind of humorous. But he posted an interesting article today talking about how, I forget which brokerage firm, I think it was Charles Schwab, had the largest number of account creations in the first quarter. They have more opened accounts in Q1 than they did all of 2020. And it's kind of funny. And he's like, these aren't really the people I want to be trading with. Yeah. They absolutely are the people you want to be trading with. Why? Because those people, and I apologize, most of them don't have a freaking clue what they're doing, and they're buying Reddit stocks. They're buying meme stocks. They're jumping on anything that's moving, and once you realize that there's a typical thing that retail investors do that's just stupid and ultimately loses, then you just look for what they're doing and do the opposite. Bear Stearns did a report back in, I think it was 2006, 2005, that said 93% of all traders lose money. So if you got a whole bunch of new traders coming into the market, I guess the old adage is fresh meat for the grinder, right? Learn what you're doing. Don't make those retail mistakes. Let's see. What else we got? A-Rod's, oh no, he's buying the Timberwolves? Goodness gracious. You know, you got to wonder who made the smarter investment. Probably Jeff Bezos' wife made the smartest investment of all time. But not Julia Roberts, Jennifer. Who is Rodriguez married to? Jennifer J-Lo. Yeah, whatever. I'll just J-Lo. She has pretty much been, if she wants to get into the music career, she, we'll just say hooks up. I don't want to use the crude words, but she hooks up with somebody who's in the major in that industry. She wants to get into acting, she hooks up with someone who's in acting. Pretty soon she's going to be dating Jamie Dimon because she wants to get into the financial world. It's like, this girl is just, she knows the right way. I'm just going to get I want to go right to the top. I'm going to go to the best and have a relationship with them, and then I'll break off the relationship when I get what I wanted. J-Lo, there you go. Okay. J-Lo. Not no more. Yeah, she's, who else has she got? She's pretty much Jennifer Lopez. There you go. J-Lo. All right, let me go to Zach's question here on cannabis. That's it. All I had for SPACs today. No, I'm not adding to my position. No, I haven't dumped it. I'm debating it, but I do think that down the road it'll be okay in the long term. It's just, boy, the rough move over the last 48 hours in VIH has been brutal, and I think it's a lot of people looking at the app going, who cares? This is not what I wanted with VIH. You know, there's plenty of other apps out there you could be using that achieve somewhat similar pieces. Although I will admit, Bax is the nicest and has the greatest flexibility there with regards to what you can buy and cards, etc. But I haven't gone out to the store and used it myself. We'll see. All right, MJ was the question. Yes, you've had some volatility in that area. Here is your downside move for MJ. Now, MJ, obviously the ETF for the cannabis, the major ETF for the cannabis industry. There's several others, but this is the big dog still. Zach says, Merlin, what do you think about MJ weekly demand zone at 2022? We'll throw a line on there for you, and I'll just make those numbers exactly. This is where I wish I had TJ, the chart master, so he could do all this, so I don't have to waste time typing them all in. 2022 and to 1834. Not fresh. No, it's definitely not fresh. So let's put on the 1834 mark so you guys have that line as well. 18.34. Okay, so you got that big zone down there. Now, personally, this is where I love technical analysis. I love charting because this means that we all do things slightly differently, and I don't have a problem with that. It's just your zone for me is a little bit too wide. It's a $1.90 range, which isn't necessarily a bad thing. I'll tell you right away, my angst here is you're going long on something that is just, for whatever reason, again, I love the industry, but for whatever reason, it's falling out of favor. It's making lower highs and not necessarily lower lows, but it's right near those lower lows. So that doesn't make me very confident with this one at this point. As far as the zone, I will draw a yellow box around where I would make the zone. And this is just a matter of personal preference, right? We all do things differently, but that would be my zone in yellow. And you'll notice that I'm shaving off a little bit off the top. It might be harder for me to get into that zone, which yours starts out at 2022. Mine would be right around 1950. So I'm basically giving it an extra 70 cents to go lower, deeper into that zone. If you're using the 2022 mark, you'll get filled before I do. I may not get filled at all if it doesn't drop that far, but I'm also taking a little less risk because I feel like price is drifting down. If I'm going to be buying something that's in a downtrend, I want to make sure that risk is as small as possible because I'm already going against the trend. If this is an avalanche coming your way, you're literally standing in the path of it saying, nope, you're going to stop right here. Careful with that. If this was an uptrend and looking to buy the pullbacks, I'm okay with the wider zone just because I know I have the trend in my favor and things are looking good. But right now, not looking the best for me. And I know we've got a lot of people here. And Brendan, shut up about Ethereum, damn it. These guys are gonna give me a hard time until I finally am right, which could be weeks from now. I dumped my Ethereum, my Bitcoin, and my Litecoin yesterday. Although the good news is I'm holding a lot of my altcoins are just skyrocketing again. But Not like Dogecoin though. Anyway, yeah, there's my kind of my analysis of that one for you, Zach. Hopefully that helps a little bit. I know you might already be long in it, and I know sometimes people don't like when I'm bearish on something that they're long on, but I'm just simply looking at that price chart, and I think we'd all agree, if you just take this MJ off the screen and forget what company this is, I think if you looked at this, you would say, okay, it's been really strong. It's not necessarily dying. It's just not as strong, right? This point right here, and I'll highlight it. Actually, let me just get rid of my yellow box here. I'll just move this yellow box up. This area right here, this whole zone, that has been pretty much nothing but weakness, right? Lower highs, lower lows. And Brendan says, MJ, I would say abandon all technical analysis. You can abandon it. You know, and I agree with Brendan here that long haul, I think that this sector is going to do great. But a lot of times things will fall out of favor. I mean, you could look at the financial industry back in 2007 and 8, and you think, oh, this is way too low. Financial firms are going to come back. Yes, they did. They absolutely did. But if you look at something like Citigroup, let me put this on a weekly so I can get back that far. God, is that long ago? Jeez Louise. When you look at these charts here, let me go back and format symbol. For some reason it doesn't, it only goes back 10 years. Let's go 30. Why don't we go 30 years? All right, so here's your Citigroup chart. Now, this obviously has done some splits, but look what happened back in 2008, right? And again, this is reverse splitted. But let's say, for example, you were in Citigroup and it started to sell off. It peaks out at $550, and all of a sudden it's at $400. And you're like, dude, this is Citigroup. Are you kidding me? This is a great company. Citigroup's not going anywhere. So you buy a little Citigroup at $400. Next thing you know, you're like, oh, shoot, this thing's at $300. Man, this is almost 50% off the high. This is Citi friggin' Group. It's not going anywhere. So you buy some at $300. Next thing you know, it's like, holy cow, it's at $200. I'm going to buy some more. It can't keep going lower. And by the time you get to $150 or $100, you're out. You're bankrupt. You're broke. And your opinion was 100% correct. This company's not going bankrupt. It's going to survive. It's a major dog. It's just wrong time. So as adamant as we want to feel about a specific industry or sector, whether that's digital assets, whether that's cannabis, whether it's financials or energy, whatever, you got to be careful holding on to that because it can continue to go much lower, just irrationally low. Fortunately, these financial firms did bounce back. But if we look at XLF, here's the financial ETF. Very similar picture, right? 2009, you're like, wow, it went from $30. Actually, let's map it out here. It went from its peak, which was $30, a little over 30. You know, if you started buying at 20 thinking this is an amazing deal, there's no way the entire banking sector is going to be down 30%. Well, yeah. And then it dropped all the way down to 10. You know, if you bought at 10, you probably got margined out or stopped out when it dropped all the way down to $5. So anyway, is that what's called getting wojacked? Well, Jerry, Citigroup should file bankruptcy like everyone else. Sure, they should. But you know, I'm just trying to make the point that that chart of MJ, it's not looking good right now. While we all, I think most of us here would agree, we all feel like that sector is going to do good going forward, it can keep going down. So I would say don't abandon technicals on that one. Keep the technicals in place just to keep yourself safe. Yep. Yeah, it wasn't just, it was, Tom, they were, obviously the subprime lending thing screwed over a lot of these financial firms, and a lot of them got way over leveraged. So it was a combination of those two. I mean, I think ultimately that's what killed Bear Stearns and Lehman Brothers, was being way over leveraged and then having everything come crashing down because of over leverage, which is obviously one of the things we teach in class is the dangers of being over levered in any asset class, whether that's going to be Forex or even cryptos or options or whatever. You got to be careful there. Okay, let's see. I want to make sure I got to some listener questions, which were back here, and this was, so I'm deviating off topic. Hey Merlin, what happened to XRP? I mean, let me look at it. I mean, I've been watching it. What do you mean? What happened to it? It's looking beautiful. You mean from a good side? Oh, for some reason I felt like you were talking about it from like a negative side. What happened to XRP? XRP is reportedly in talks to settle with the SEC, which means that looming issue with them has been pushed out of the way, and I believe that this is a major reason why you saw cryptos and are seeing cryptos still continue to run. It has a lot to do with the SEC looking at Ripple and now all of a sudden backing down a little bit, and then you have the IPO of Coinbase. So you have a great legitimacy to the crypto assets, and all of a sudden the SEC's backing down a little bit. So it really opened the doors and put a lot more optimism on digital assets. As you can see here, these guys are still running. Here's the daily. There's your Bitcoin. There's your Ethereum, which is just off to the races. Love it. Unfortunately, I dumped mine yesterday. Polkadot, Litecoin, still ripping. Obviously I wish I would have left it in there, but I'm not too concerned about it. I'm happy with my profits, and I will buy back in when they have their pullback, which will ultimately come. Now, the one that's interesting, and I still hate the company, is Dogecoin. You guys saw Dogecoin. It was trading at a nickel 4 days ago, and now it's trading at almost 19 cents. Pretty awesome. Yeah, no, here's the thing. When you say I don't understand Dogecoin, we can make the same argument that we don't understand any of these cryptocurrencies. And what I mean by that is, why is Bitcoin the chosen one? Because it's a proof of work algorithm? It's because there's only 21 million? Then why can't I create another one, an exact copy of Bitcoin, call it Merlcoin, and there's 21 million of them, has the exact same emission curve, same rules, same everything, and now we just say, well, that one's much cheaper, we'll use that one instead. It's because of the popularity of Bitcoin, and it's because of, at least with Bitcoin, it's a price point stability, which people like to have the price going up and seeing it charge. With Dogecoin, it was started as a joke, right? We all know the backstory. I did one on this a while back, where it was started as a joke, but could it take this money now and start building out a team of developers to make this one Bitcoin-ish, meaning it now might look as mainstream monetary. It could be a currency, right? It's got a much faster settlement time than Bitcoin. There's a lot more of them out there. It's not going to be an $80,000 item, but could you see it at $1? Yeah, sure, you could. Lisa says, do it. I actually spent time over the weekend trying to start up my own digital cryptocurrency, which is actually very simple to do, but it was going to cost me $290 worth of Ethereum, and I'm like, I'll just wait and see if I can do it for free, because that's just the way that I think. But I'll probably have one for you here, and then I'll walk you through what the process was to create your own digital asset, digital tokens. I don't know if Lisa did. Right now, this is the new GameStop for the Reddit guys, and it's easy to do. Right? If you look at this, you're telling people that they can now buy Dogecoin for 18 cents. And Webull today I think it's today or yesterday, announced that you can now buy Dogecoin on Webull. It's funny, Webull is all kinds of digital assets, but they just added this shitcoin. I mean, that's what this is called, guys. It's ridiculous. But they just added it, so now all of a sudden you have all these people who use Webull can now buy something that was 10 cents. So they'll go, I'll put my Stimmy check in there and buy 12,000 Dogecoin. And they're being rewarded handily for it. Bro and the Wizard, non-fungible tokens. Nope, not going to do it. Okay, let me go to this listener question, and then I'll wrap it up here. This question came in from Alan, I didn't see him in here today, but Alan, if you are listening, this is the question that you wanted. I was listening to your show the other day, and you mentioned that 10% return for a trader is great. Well, I don't know if I said great, but it's if you can beat the market averages, then I would say you're doing pretty good. Okay? And that most professionals underperform the market. I suppose for an investor, both of these are true. However, for a trader, especially those who trade actively and wish to do it for a living, 10% seems very beatable, even for a normal year, given the context of market conditions in the last year. I'm curious why you made the comparison between investor returns versus trading returns, as their philosophies are drastically different, even opposite at times. Okay, and that's a great point. And here's the reason why I did that. Because when you look at the statement I made about average rate of return for the market, that's looking at the course of time. And if, again, we talk about the architecture of markets, and markets are designed to go up over time. Depending on which point you pick in time, it's 8 to 10% average rate of returns. That doesn't mean it's up every year, but the average means we're looking at 8 to 10. So if you can beat 8 to 10 compounding over time, that is a clear path to wealth. I believe that market timing plays a huge factor in this, which allows you to beat that 8 to 10% average. But as I told you, my trading plan, my goal is just to beat the market. Anything above that is gravy, and I'm doing awesome. Now, as a trader, to me, this is where it gets challenging because in my experience, most people that try to be an active trader lose money. They just don't have the discipline in place. They're shooting from the hip all the time. They're trading things they shouldn't be trading, and they go outside of their comfort zone, and then all of a sudden they end up having 1 or 2 bad trades, and it's all for naught. So while you might have months where you're up 10% a month, and it's like, okay, great, January, 10%, February, 10%, March, 15% up, April, down 46%. Those first 3 months of the year when you had amazing profit is all gone in 1 month. That's the typical storyline for somebody who calls themselves a trader. Now, when you look at a lot of the guests I've had on the show, the cornerstones of what makes them good to great traders is they don't have those big down days. Unfortunately, our emotions, we talk about this so often with Dr. Woody Johnson and many others, is the inability to control those emotions and the inability to stop a loss streak when it happens. I was very fortunate that I had somebody on that trading floor back in the 90s pretty much grab me and say, get out of here. You're losing. Move, beat it. You're going to continue to lose until you change your mindset, you idiot. And I was like, well, you're calling an idiot. Glad he did, because it fixed me and helped me change a lot of things about me. But I don't think that they're obviously very, very different. Investor is just saying, all right, I'm looking at the big picture. I'll buy it, I'll hold it, and I'll ride out those ebbs and flows. Someone who's actively trading, you've got a lot more pressure on you, not just maybe on a monthly basis, but depending on your style, could be for a daily basis where you're looking for specific profit targets. And I know a lot of people who do this very successfully. I've also known thousands of students that I've looked at and talked to over the years where I know they come in wide-eyed and very excited about being a great trader. And it's not for the fault of the educator or the organization that they learned from, whether that was, any school out there that you want. It's generally the inability of the end user to apply rules, stick to rules, follow the rules, and be unbreakable with regards to those rules. As I mentioned many times, the market has an uncanny way of presenting you with wins early on so that you think, oh, well, I just spent $3,000 on a class where some guy told me this is really difficult and I made $5,000 my first week, and your risk management goes out the window, and all of a sudden the market's like, fooled him. Now I'm going to take all your money out of your pockets very quickly. So that's kind of my viewpoint of it is, yes, the trader I believe can beat the market regularly if they're good and they're extremely disciplined. But I think on average, most people aren't going to achieve those trader type rates of returns, and they won't beat the market, which is why I try not to edify or glorify too much that side of things. I like to set that bar somewhat low and say, look, if you can't beat that market, then just buy the SPY and go golfing and do something else. If you are more active and you have great discipline, great risk management, and you know that you're willing to admit that you're wrong and back out of a trade no matter what, fine. Then you can probably beat it. But I try not to go overemphasize those numbers. Could you have a 30, 40% rate of return year? Absolutely. Could you have a 100% rate of return per year? Absolutely. Now, doing that consistently year over year over year, that's where it gets very, very challenging, especially when we have a market switch, meaning we've been in this bull market since 2009, and other than that flash crash, the COVID crash in January, February, March, we've been pretty much nothing but up. When we go and flip and we start to have a prolonged downtrend, that to me is really where the real traders step up. Because in a downtrend, like a deflationary environment or just a bearish market, so many people are trying to pick a bottom here. And it's much like that chart we saw on MJ. That trend is down. Your odds are better of making money going short on that security, regardless of our opinions or feelings. And, you guys saw me get burned pretty badly March, April, June of last year when I was in a very heavy short position on the SPY expecting that second dip. Just never happened. It's okay. I went into that trade knowing and expecting that if I do lose, here's the amount of capital I'm going to lose. I was wrong on that one. So be it. It could very easily have turned around and been one of the bigger winning trades I've had in quite some time. It just wasn't. But I followed my rules and I stuck to them. If we have a prolonged downtrend, a lot of the people that who have been bullish and just long and strong, and that's their attitude, they're going to get washed out and they'll be gone. And it'll be a great cleanser for the markets from a lot of people. Okay, let me see here, Brendan. Hey, Brendan, we got Mr. Wendell with us today. Good to have you, Brendan. Although I'm trying, I don't see question marks. I can't read all the conversations with you guys right now. All right, well, if there's questions, send them in with question marks. Jerry said Merlin's right. I blow a Forex account to catch and fall knife. It's tough. You know, you think, oh, it can't go any lower. It's going to bounce right here. And we're going to be wrong a lot, guys. We're wrong a lot. Man, I could say I may be wrong. If when I was really heavy day trading, I was wrong every single day. But there were trades I was right on as well. You're going to make wrong trades. It's okay. You missed the map and the artwork? I could lift up the green screen and show it to you. But... All right. Alan says, what made you dump crypto? I mentioned bearish divergence weeks ago, but it didn't play out. What did you see that made you sell? Here's what I saw that made me sell. I'll show you. This is what made me sell. I'll bring you, there's your daily. I'll look at the weekly. That's what made me sell. If you look at Ethereum, for example, we've gone from $200 up to $2,500. And it's still ripping, which is unfortunate because I just dumped it and I would have made a bunch more money. But I still have a lot of the other my shit coins. I really just dumped those 3 positions, the big dog, because they were easy because they're sitting at exchanges, which makes it easy for me to dump. Some of the altcoins are not. But it was what made me dump it was my accounts. That's pretty much it. I looked at my account numbers and I went, wow, you know what? I don't want to give this back. I'm leaving a bunch of it in there, but what I'm anticipating happening is what normally happens after a huge parabolic surge. You get a dramatic sell-off, a 20 to 30% sell-off, and that'd be great. And unfortunately, it just is ripping right now, but I thought we'd start to see this slow down a little bit after the Coinbase IPO. I thought we might see a sell-off. I was wrong. For now, I was wrong, but who knows what happens. Bottom line is, I've locked in profit. I'm not going to worry about it. Could I have made more? Yes, I absolutely could have. Am I over and above beyond excited about the returns I made on that crypto portfolio? Yeah. So I won, period. I just didn't win as much as I probably could have yet. Well, we'll see what happens over the next week or two. Okay, 1 or 2 weeks, this might slow down, but gosh, watching this thing go from $1,500 to $2,500 in a month is pretty impressive. When you're looking to get back into Bitcoin, you sold. When am I looking? Bitcoin's probably the most interesting one on here because I really didn't want to sell Bitcoin. Bitcoin, if you look at on a daily time frame, it had an ascending triangle, which honestly is one of my favorite patterns, and I really sold it on a retest of this. I probably should have kept this. This, of all of them, looks much more bullish than any of the others from a structure technical analysis perspective. This is like the ultimate breakout pattern right now. So yeah, I'm a little disappointed I got out of Bitcoin, but I'd rather just have the cash in my pocket and figure out the taxes on that one later on. But I'll probably look to get back into Bitcoin. If it gets down to 56, I'm not looking for a huge correction. But if you look at the amount of Bitcoin that I had, if I sold out at 62 and I buy back in at 56, I'd end up making $6,000 per Bitcoin extra. Ethereum, I actually thought we'd see a little bit bigger of a pullback, but it is what it is. I'm not going to overly worry about that. Please don't sell more. I'm not. Oh, and mind you, I didn't sell all my Bitcoin, right? There's some that I have on my cold storage that I'm not going to sell. Those will be there forever. Those are completely offline. But like the ones I had at BlockFi, I sold both of those, converted to cash. And by the way, I'll tell you that the spread at BlockFi, for anybody thinking about selling at BlockFi, don't do it. I will do a special show, I think, at some point on, wow, they had $1,000 spread on Bitcoin. $1,000. So if you wanted to buy it, it was $1,000. It was $500 above market. If you wanted to sell it, it's $500 below. It was a crazy spread there. That just does not need to be that big. That's how they're making their money. The worst thing when you get back in, Merlin, you have a new cost basis in. I know. Yeah, it all depends on how those taxes get declared. Well, we'll see. See, it all works out. All right, let me go to your... Actually, I want to show you what happened today because there was actually some noteworthy things that happened today. Here is your economic calendar for today, and then we'll wrap it up. This number completely blew me away. I did not expect to see this retail sales number come out above 5.8%. It was 9.8% increase in retail sales. I don't have the chart up, but I'll see if I can bring up the chart for you guys tomorrow. Big difference. It's like, wow. If you look at the charts of it, huge swings that we saw back in February and March of 2020, and then we came back to some semblance of normality here, right, or normalcy. We're not seeing that now. We're seeing all of a sudden big spikes up in the retail sales numbers, which obviously is good for the economy and maybe why we saw the markets react so nicely today. Now, down this list as well, you have Empire State Manufacturing Index, which was much higher than expected. That was great. Other than that, capacity utilization was pretty much in line with expectations. So really good news for the equity markets overall with regards to the fundamentals, especially that retail sales number. Now, on the earnings front, this is what we had happen today. You had Bank of America following the lead from Wells Fargo, JP Morgan, and Goldman yesterday. They had blowout earnings, beat by 32%. Citigroup beat up by 41%. I didn't get I think Ally Financial actually is off the screen here. But other than that, you had PepsiCo, you had Delta Airlines, which no surprise had a big loss. They missed by 15%, losing $3.55 per share. We'll see how long they can last before they go into bankruptcy. For tomorrow, I didn't change the date. I'm sorry if I will do it right now since no, I can't do it on this one. It's a different one. This is for the 16th, guys. I just didn't update this. For tomorrow, you got Morgan Stanley, PNC Financial, Citizens Financial, the Bank of New York. You also have Ally Financial and State Street reporting tomorrow. And then for tomorrow on your economic calendar, this is also for the 16th. I think I can actually, can I do it here? I love when I can just write on the screen. We have the power. We'll just make that a 6. There you go. Even when I mess up, I can still fix those mistakes. There you go. For the 16th, you don't have a ton for the U.S. You do have building permits and housing starts. Those are both expected to increase. For the rest of the world, if you're trading the euro, in the wee hours of the morning at 2 a.m., you have CPI numbers coming out for the euro. Now, remember, our CPI numbers for the U.S. were actually in line. It was the PPI numbers, which were much higher than expected. So, yeah, we'll have to keep our eyes on that one as they happen, but that'll all be way out before the market even opens up. All right, and that's pretty much it for your economic calendar for mañana. All right, Tom says, Merlin, Alan asked above. Yes, 6 posts above. Where is it at? You think GBTC will recover its premium versus Bitcoin? I don't think so. And that premium has been crazy. Here is the premium. It's dropping quickly, and I believe, if my understanding of the trust is correct, there's a certain time frame where they can buy and sell assets. It's not like an ETF where they can do it right away. The trust, there's a holding period. So I don't know. I don't think that this is going to get any better against Bitcoin unless Bitcoin's price falls dramatically. So, I think people are pulling funds out of GBT, which, by the way, is the second largest out there. The commodity ETF GLD has $57 billion worth of assets. GBTC has 50. So it's very quickly going to pass here soon. It'll pass GLD as the largest out there ETF in the commodity space. But yeah, I don't know. I think there's something fundamentally wrong, because if I was working at GBTC, this is an easy fix, right? Basically, this means I've got too much supply of Bitcoin in my inventory. Well, just sell some of it and get your inventory back down so that it goes back up to equilibrium price. For some reason, they can't do this. I'm not exactly sure what the problem is, but it has to do with them being a trust. Because you've heard all the talk track about how GBTC wants to change to an ETF system, but the SEC will not allow a Bitcoin ETF yet. You've had multiple people. You've had Gemini, the Winklevoss twins, a whole bunch of other ETF companies saying, hey, let's do a Bitcoin ETF or crypto ETF. Nope. You can have a digital asset company, right? Companies that are in the space ETF, but you can't have a cryptocurrency ETF yet. It will happen hopefully very soon. When that happens, then all of us, GBTC has already said they want to be the first ones out there, and that will change this inefficiency of it, this premium versus discount thing. Because right now, if you buy GBTC, you're getting a huge deal, right? I mean, right now GBTC is trading at let me bring up this ticker symbol. GBTC, bring it up here. GBTC right now is trading at 52, so you're actually paying a huge premium, because the actual, it's a discount, I'm sorry. $52.60, that is $52,600 would be the assumed price of Bitcoin, because this is supposed to be 1/1000th. If you look at the price of Bitcoin now, it's $63,600. So yeah, this is trading at a huge discount right now, and it's a bizarre reason why. All right, that's gonna do it for me. PPI usually leads CPI. Well, Brandon, if you're right, then we are going to see inflation numbers rise because, as I mentioned, the year-over-year growth in PPI was 4.2%. And the reason for that, guys, Brandon's absolutely right here. He says if you look at PPI, it's a producer price index. And if the producers of these goods and services that we buy are seeing costs rise 4.2% year over year, then you know they're going to pass that extra cost onto us, the consumer, which is the CPI numbers, and that will be a little bit of a lag there before those numbers influence. So we should probably start to see next month's reading or the month after that, CPI numbers start to kick up, which of course could lead to more inflationary pressure. GDLC. I haven't looked at GDLC. GDLC. Well, I'll have to look at this one and also find out. Yeah, this is not an ETF. It's a fund. I don't know if it's specifically a trust, but it says it's a cap fund LLC. So I'll see what the structure of this one is. Hopefully it'll track closer. But yeah, something's broken on GBTC. I would probably just stay away from it. All right, guys, that's going to do it for me. I want to make sure I wrap this thing up. Tomorrow, obviously, is the Friday show. Normally, I've got a cocktail here, and I'm getting hammered on the show. I'm kidding. I don't get hammered anymore. But I'll have a glass of whiskey with you. I will still have a drink with you guys tomorrow, but I'm not going to be doing the show solo. I am going to be doing a show with Mr. Sean Reed. We're going to be talking about options tomorrow and probably just trading in general. It was hard to get him on the show, and he's like, I can do it Friday. I said, fine. I'll give up my solitary world on Fridays with you. I don't know if he drinks at all. He'll probably have an orange juice or something because his kids are at home. But we'll do, Sean Reed will be on the program tomorrow talking options. So if you have an options question or long-term investing thing, or really any question, do me a favor, send those on in. TraderMerlin@gmail.com is the easiest way to get those questions to me and answered on air. Hopefully, you guys get some good questions answered today as well as for tomorrow. Anyway, thank you guys so much for all the questions. I do appreciate it. Again, if you liked the show, give me a thumbs up. If you didn't, well, that's too bad. Just email me and let me know what you didn't like. If I know it's probably because Brandon Wendell was in the room today. You know, he's always just a distraction out there, but I'm just kidding. We'll have Brandon on here again soon in the near future. Anyway, thank you guys so much. Hope you enjoyed it. Careful with those SPACs out there. It's looking pretty ugly. Don't be the one trying to catch the falling knife on a lot of these. Looks a little bit dangerous right now. Anyway, that said, have a great day. We'll see you tomorrow. Take care.